Hello, this is Joe Pryor of the virtual real estate team.com in Oklahoma City, and this is part 6 of our 12-part series on investing in real estate. What I want to do is go into the most important terminologies of return on investment that we use, and we're going to talk about 4 of them. The first is capitalization rate. What we do is we take the total investment, and let's say that's $100,000. And then we take your rent less expenses, and that's your net operating income before debt service. So let's say that that's $10,000 for sake of explaining this. What we have at this point is a 10% capitalization rate. We got 10% of the total investment back, and that is something that some people will buy on. They think a 10 cap is wonderful, but the most important thing is that we talk in terms of how much money is coming in relationship to your total investment, and that's going to give you a snapshot of how good that investment is. Now, there's a second term we use called cash on cash. Now, this is where we take that net operating income, and now we're going to remove the debt service, the principal and interest that we're paying on the loan, and we're coming up with a cash amount. Now, if you bought that $100,000 house, you probably have about $25,000 in closing costs. So, you know, if you got back $6,250 in terms of actual cash at the end of the year after everything, then essentially what we got is 25% of your money back, of your actual cash back. And so we have a 25% cash on cash return. That's another important figure. Now, it's not going to be that high a lot of times. It's going to be about 15% or whatever, but that is still outstanding return. That is still something that's beating the rate of inflation. Now, the third thing that we want to talk about is internal rate of return, and that is for the life of the time that you own that property and you're keeping all your money invested in that property during that time. What is the annualized return that we are getting? So what we're going to do now is we're going to take all those other things that we computed for those first two, and we're going to add a little appreciation. We're certainly going to be putting in vacancy rate. We're also going to be putting in some other things that are going to affect the ability to get a particular return. We're going to take your profit and we're going to say, well, we're going to park it in a 2% account, and so that money's making a little money that you're making in terms of positive cash flow. And then what we have is, say, a before tax and an after tax return over that 7 years, where we can say, well, you're getting 30% return on your money every year annualized for the total investment. And really the most important thing is that at the end of that 7 years, we evaluate what your wealth position is. In other words, after everything is said and done 7 years, I have $150,000 clear. Now, the reason why we do that pre-tax is because we're going to talk about a 1031 tax-deferred exchange later about how you can take that money and reinvest it and not pay tax. Or we're also going to be talking about, if you don't do that, what you're going to do if you do pay capital gains and recapture tax, and we'll explain what that is. The fourth term I want to talk to you about is depreciation. What the federal government allows you to do, or the IRS allows you to do, is to take that home, and if it is a home, we take 27.5 years and we divide out the improvements in terms of 27.5, because you can't depreciate land, it's always there. And what we have is now amount of depreciation on that investment that we can take off the taxes. So very simply, if you have $500 a month net positive cash flow and you have $500 a month in depreciation, we can pretty well say that you're not going to pay any taxes on that investment. So that's the fourth term that we're really going to talk about initially when we're involved in real estate. As I said, when you and I get together, when we talk on the phone, when we meet in person, we're going to get into some more details. We're going to show this to you on spreadsheets. Make sure that you understand it, because we want you to know that you're getting the best investment possible in the Oklahoma City market. This is Joe Pryor of the virtual real estate team.com, where we deliver traditional real estate values at the speed of technology.